Alrighty guys, so welcome to the next part of the course. We're going to just be talking about why institutional trading wins and why retail loses. So let's get started with it. So the reason we try and trade with the institutions is because they're trading such high size that a lot of times they're controlling a lot of the moves in the market in some way or another. And the main reason retail traders lose money is because they don't know supply and demand. So they'll be going long into a supply zone where you should be looking to short, and vice versa. For example, if there's a high day breakout that just occurred, retail traders would probably be buying that breakout. But then institutions know that we're right at a key supply zone, and retail goes long, and then the institutions go short with huge size, and then it causes a false breakout, right? So then retail loses, institution wins, and then that's why we have to think and trade like the institutions. So money is made from institutions taking it from retail traders, basically. The retail traders provide the liquidity for the institutions, and then those institutions get their big orders filled. So let's look at some examples here. So let's look here. This is on ES today, okay? So first thing I'm noticing right here is we kind of have this pre-market high, you could say, kind of like right here and right here, right? And also kind of rejected right around this area. Also right here. So kind of like two little areas right there. People, retail traders, right? Market opens here, and we're kind of curling up, First thing I'm noticing, big selling wicks on these candles, right? Big selling wicks. That's the first sign that this uptrend is not going to last very long. And then secondly, retail traders might be going long here once we break through this little area, assuming that we're going to be breaking high of day or the pre-market high, right? So they're buying right around here, then a hard rejection, right? And institutions are more aware of these things than the retail traders, right? And then we had a heavy drop the rest of the day so far. Let's look at like the past couple days here. See if I can see anything. So yeah, here. So here we are in a demand zone. This is a couple days ago. On a 1 minute chart, I'm going to look at a 5-minute chart just because it looks a little better. So first thing I'm noticing, we keep moving lower during this day. People are probably shorting all around here, shorting here for like new low of day, right? Because this was the previous low, and now it's new low of day. And they're probably shorting, assuming that we're going to be really pushing down lower. And then we just all of a sudden get this reversal, right? But institutions know that we're in this demand zone. So those institutions are way more aware of the situation. There's a trend line here, just connecting this and this right here. Then we get this third bounce off that, which is a very good long play. But yeah, institutions are filling up their orders down here for a reversal, right? While retail traders are shorting. So one thing that we want to keep out for in demand zones is double bottoms, right? So here's a bottom, here's a double bottom, right? Double bottoms are always really good. So like if you see a double bottom forming and it breaks out of like this resistance line, take it long right around here. Good buying volume to confirm. As you can see, this has good buying volume. And yeah, retail traders, they see like we're heading down, we go up, maybe they think like, oh, a little bear flag forming, right? Like a little bear flag, we're going to keep going down, and yeah, we moved down a tiny bit. So if they're scalping, they maybe could have taken away some wins. But for the longer moves, you take this long right here on this double bottom, put your stop loss right below the low, really low risk. You target your target VWAP or you target supply, which we ended up hitting over here, which would have been a huge play. But target probably, VWAP or break of this SMA line. So up here, which that would have been, anywhere from 30 to 100 points on ES. Each point is $50. It's a lot of money. It's a lot of money. So, yeah, you can take your profits quick there. And this is like just about an hour play. And you can make, with one contract, right around $2,500 with just one contract. Yeah. So that's basically just why institutions win 99% of the time and retail traders lose 99% of the time. Simply because they'd be, going long up in this area for a high of day breakout while we're in a supply zone, and then we just gap down, or they're going short right here for a new low a day and we're in demand, and then we reverse. So it's just like a never-ending cycle. So yeah, we'll touch more in the next episode. So on to the next one.